Welcome everyone to HueFin News. Today is November the 2nd, 2018, the home of the 2-minute price prediction, as well as giving you all the news according to the charts. And as you can tell by the thumbnail, Apple stock plunges 7% today after its after-hours earnings report from yesterday. And you may be asking, if the earnings report were positive, then why would this particular stock be down 7%? We're going to talk about that today on this particular video. Before we do appreciate you taking the time out to watch this video. If this is your first time watching this video, go ahead and subscribe to this particular channel, and as well hit that bell button so you will become more notified whenever we upload this type of material to YouTube. And as well, if you do appreciate this video and you do like it, go ahead and hit the like button and share it with somebody else who might benefit from this understanding of how the market actually works. Okay, so this article was posted today on the Motley Fool. They just have it here on Yahoo Finance, and it reads, Apple earnings, revenue, and profits soar. It's written by Daniel Sparks. And I went through this particular article and I highlighted some things that are very positive for Apple. And you may be wondering, if that's the case, then this particular stock should not be moving lower in price. But that's not how the market operates. The market operates in a predictive fashion. That's why we're giving you all the news according to the charts. We look at the charts to predict where prices are likely to go. And that's what a lot of the other analysts who keep their eyes on this particular stock do as well. They predict where prices are likely to be in the next 6 months, 9 months, 12 months, whatever the case may be. But again, we got to get out that notion of following or being reactionary to the market. We need to be proactive into where we expect the market to go. Okay, so right now, Apple has a moderate buy rating by 34 analysts. 23 are a buy. 10 of them are saying that Apple is a hold, and there's only one sell analyst out there in the market for Apple right now. And on average, all the analysts have a price target of about $240. We'll look at that once we look at the price chart. There's a high price target of about $310 and a low price target of $200 per share. Okay, now let's get into this article and see exactly any negativity that we may pull out that can kind of insinuate the reason why Apple is trending to the downside. So after 7 quarters in a row of positive revenue growth, Apple managed to still grow its business even faster in its previous quarter, which was ended yesterday. The revenue soared 20% year over year. So this time last year, they have increased their revenue 20%. The company benefited because of the iPhone revenue and big gains in the company's services and other products segments. Now, looking at it a little bit further, in the particular earnings report, it goes on to say or write, investors should not expect Apple Street to continue in accelerating growth in the first quarter of 2019. Now, you might be thinking, well, we're going into the holiday season right now. This should be the perfect opportunity for Apple to see some very positive growth in all of its Apple products. So why would they be trying to insinuate not to expect any more growth coming into Apple starting in fiscal year 2019 in their first quarter? That could be the reason as to why Apple is moving to the downside right now. This is a year-over-year quick chart metric of how increased revenue has been for Apple, as well as their earnings per share. You can see here back in 2017, they had revenues of 52.6 billion, and this last quarter 4, 62.9. That's 20% increase. And you can look at the earnings per share. 2017 was $2.07 per share EPS, and $2.91, which is a 41% increase. And you're gonna, as we continue to read down this article, you're gonna find out that the earnings per share increase was only due to majority of Apple buying back their own stock. Apple results demonstrate monstrous momentum, with revenue rising 20% year over year to $6.29 billion. We just saw that in that particular chart. The company's fifth quarter. This is the company's 5th quarter in a row of double-digit revenue growth. The earnings per share growth of 41% year over year was also an acceleration from 40% growth from the key metric in fiscal quarter 3. The reason why the earnings per share increased or outsized significantly was because Apple's aggressive share repurchase program. This could be the indication as to why, again, another indication why we're seeing Apple moving down 7% right now. It's because Apple is aggressively buying their stock back, and once they ease off the gas pedal for that, you can definitely expect the price of Apple stock to move to the downside. Okay, so looking ahead, this is what I want to talk to you all about, how the market and the analysts who track Apple, they are looking ahead. They do not react to some of the things that occur in the news as well as videos, and we all need to break from that particular mold. This is one of the main reasons why we're on this channel, is for you all to start looking ahead, to be more proactive rather than reactionary in your trading. So Apple News revenue guidance implies the company's streak of accelerating growth is about to come to an abrupt end. So it's not like a slight downward ending. They're saying a very quick, abrupt end. So the analysts or the individuals who actually prepare this guidance see something on the horizon that is not positive in Apple. So this is something that we need to keep our eyes on too as we continue to go out and trading. We're going to look at the price chart as well, and we're going to see whether or not Apple is going to move to the upside or even it's going to move lower in price. So now one last thing here is that despite the expected slowdown in the important holiday quarter, Tim Cook is still trying to put some positive spin on this last guidance statement, saying that they're still looking for very positive revenue growth in this last particular quarter of 2018. Now, once we look at the chart, you're going to see that that's not actually the case. Let's go ahead and move it to a weekly real quick. No, let's move to a monthly. So this is a wider scale of what we're seeing in the market for Apple on a monthly time frame, and you can definitely tell here that we're starting the month of November on a very sour note. $200 maybe towards this high of this particular month of July, around 195 could be where Apple tries to hold support. But currently you can still see here that the weakness is still in the market on the weekly chart. So all of those analysts who are giving Apple a moderate buy rating definitely is not the right time to buy Apple according to the price chart. Looking at it on the weekly chart, we conclude this weekly price bar the way that it looks now. Apple's going to continue to move lower in price. You can see it might come to that 203, but ultimately it could come all the way back down to 195, which I have already told you on the 1 hour chart. And literally I'm still expecting Apple to move lower. I will be looking for initial support to be right there around $204 per share. But then again, the market can definitely continue to move all the way back down to 195. And that's only if, so these are my three support areas: 205, 200, and then 195. Okay, but either way it go, the market is still giving us some weakness in the Apple. Still expecting this particular stock to move lower. The price chart is telling us that it is going to continue to move lower. The article though, according to the positive revenue earnings growth, you would expect the market to be shooting higher in price. Well, that's not the case. Okay, so that's why we all need to pay attention to the price charts. The price chart already has all the information for you on the chart. So once you understand exactly what's going on the price chart, you can eliminate reading articles. You can eliminate trying to figure out what the revenue is for the company. You can forget about earnings per share, gross profit margin, all of those technical indicators. All of those fundamental analysis indicators are literally already on the chart. The analyst that I just mentioned earlier out in this video has already done that work for you. Once you understand the price chart, this is the only thing that you got to worry about. And literally the price chart right now for Apple is telling us that the movement to the downside is still in play. I am looking for Apple to move lower. I have identified those 3 support areas: 205, 200, and then 195. And again, if the overall market, the trade war with China continues on, it can move a lot lower than that in price. Okay, so that's why they're trying to get you prepared for an abrupt end to that revenue growth that they've been seeing. So that's all that I got for today. This is just another indication of why it's important for you to all to look at the price charts. Give us your opinion. Do you guys think that Apple is going to move lower? And if so, where do you think it's going to find support? Or do you think this is just a huge mistake and we're going to see Apple recover and move high in price throughout next week, even for the whole month of November? We definitely would like to know your opinion. Let us know. And again, make sure you all subscribe to this particular channel. Hit the bell notification so you guys become aware of whenever we upload videos. And again, just one more plug. We do have a paid service on our Patreon page to where you're able to get more of this type of analysis, understanding, and personal service, to where we're able to answer your questions more in depth rather than here on this particular platform on YouTube. So if you're interested in that particular aspect, go ahead and hit that link in the description of the video. And from there, you guys will be able to sign up and have more personal access to all of our other exclusive content that is not available on YouTube. Again, we do appreciate you all. Make sure you all maintain your profitability, and I will see you later.